Hello and welcome to this webinar with Mortgage Solutions and Skipton Building Society. Today, Jen and Lucy will be speaking about the current market for first-time buyers and home movers, the issues faced and what lenders could do to help, and crucially, what this means for brokers. At Skipton, we're committed to working closely with brokers to tackle challenges together and wherever possible to come up with some solutions. That might be in changes to criteria, or our internal processes, or with new innovative products. 2 years ago, we launched our low to no deposit track record mortgage, and we've recently brought out a new product, Delayed Start, which is designed to help ease upfront costs for first-time buyers. Hopefully, you already know Skipton for great service and innovation, and we want to keep this up. We always welcome your feedback, so please speak to your dedicated BDM if you think there's anything else we can do to better support your business.
Hello everyone and welcome to this Skipton Building Society Masterclass, and thank you so much to Charlotte for recording that message. Working in the industry, we all know that there are immense challenges for both home movers and first-time buyers, from the rising cost of living and renting making it harder to save a deposit, growing house prices, moving the goalposts, and regulation like stress testing limiting affordability. There have been innovative offerings, like Charlotte mentioned, the low to no deposit track record mortgage, which includes rental history and affordability, and the latest deal that Skipton Building Society has just launched looks to address another barrier. Delayed Start is a product for first-time buyers and has no mortgage repayments for the first 3 months, which will allow breathing room and help first-time buyers manage extra costs associated with buying and moving into a property. I'm joined by Jen Lloyd, Head of Products and Proposition for Homes at Skipton, and Lucy Lewis, Senior National Account and First-Time Buyer Lead at Skipton, who will talk about current market challenges, what we can do as an industry, as well as going into a bit more detail about Skipton's Delayed Start product, as well as, going into the genesis behind it and which customers this could support. There will be a Q&A session at the end, so please submit your questions as we go. And without further ado, I'll hand over to Jen and Lucy to kick off their presentation.
Thanks, Anna, and hi, everyone. It's great to be with you today.
Hi, Jen. So, I'm really excited to be able to talk to everybody today about what we've got going on. But should we just kick off with what's going on in the market and kind of what we've seen? We're pushing towards the end of May very quickly. I'm not quite sure how we've got there already. And really interesting, isn't it? So we started the year with kind of predictions from UK Finance of a 260 billion year for lending. We know that there's loads of mortgages coming off their maturity date as well. So a really big and kind of exciting year, I would say. But what are the things that you would like to talk about and highlight? Because obviously in products and propositions, there's been lots going on.
Yeah, absolutely. I think in terms of the market, I say this all the time, every year, but it's just incredibly resilient is the mortgage market, and we see huge levels of demand, and it's great to see. Clearly, we've had a very busy Q1 as an industry because of the stamp duty changes, and so we certainly at Skipton we had a huge Q1 and March specifically. But what I've been really heartened by is the fact that actually demand continues to build from that point. So we're seeing more activity in the market. I know 27 Tech Data highlighted that kind of the last couple of weeks have been the busiest on record for a long time, and we're definitely seeing that. But that's fantastic, and it just shows that demand is there. The challenge that we have, which we know we talk about a lot as a lender, is that the people that want to get onto the housing ladder, those first-time buyers, they are facing kind of some of the biggest barriers than ever before when it comes to the hurdles they have to overcome. And certainly from our own group affordability index findings, there's some very stark facts in there around 9 in 10 would-be buyers can't afford to buy a property in their local area. So that feels to me like a big challenge. But we are clearly doing everything that we can to address that challenge when it comes to helping people take those steps onto the ladder. The other thing that I'm really excited about is the FCA's planned consultation on the mortgage market, because we know that sometimes regulation kind of inhibits our ability to innovate and our ability to lend to the amount that we would like to do. So some of the areas that are under review are the loan to income cap. So at the moment, all lenders across the industry, regardless of size and markets that they play in, can lend no more than 15% of their lending to people at more than 4.5 times loan to income. That constrains affordability, and what we see is that there are instances, certainly from our own data, but talking to peers, this is true across the board. Having that cap in place means that borrowers are offered smaller loans than they need, where we ordinarily would lend to them. So it's not our own affordability that's saying they can't afford it. It's actually, no, this PRA limit is inhibiting lending. So it's good to see that that's kind of being discussed much more openly now, because it's long been a challenge and a bugbear in my mind. And then the other element is around kind of streamlining the ability of consumers to access advice and get the help that they need without the need for lots and lots of additional hoops to jump through. So kind of making mortgages more accessible to more people. And I guess certainly from our point of view, financial education is really important, and helping to illuminate the elements of the house buying journey as soon as possible for people that are really keen to know more, because it's an area that isn't taught about in schools. And people, I'm always surprised by the research, because we can take it for granted in our industry and think that buying a house is straightforward and people know what loan to value means, and that's absolutely not the case. So that's certainly where I see brokers playing a role as well, in terms of helping with that advice and supporting on the journey as soon as possible. But yeah, I would say things are looking pretty good so far from a market point of view. What do you think, Luce?
Yeah, I think it's really interesting, actually. I mean, I guess the changes from the FCA and PRA have come from the government, really, haven't they? Because they wrote the letter saying that they needed some support growth, and we're definitely seeing things come out of there. It will be interesting to see how much more. We've seen lots of lenders kind of change their stress rate, which I think is a positive. But obviously, that's not, like you say, that's not the only thing in play there. Really hope it does help to open the door for more people, because I think home ownership is so important just on so many levels, and just the kind of links with social mobility as well, and actually owning your own home, and the difference that it makes for children to actually grow up in a home that's been owned. I think that's really important, and something that we're only actually just beginning to talk about in this industry. Totally agree with you, but we probably take for granted a little bit sometimes that people understand the home buying process, because we know, don't we, that some of the language we use is language that we're familiar with, but that people on the street wouldn't necessarily be familiar with, like early repayment charges, things like that are just terms that we absolutely know what they mean, but if I went and asked my 18-year-old daughter, she wouldn't know what I was talking about. And she's quite clever, but she wouldn't know. So I think key is, for us and for mortgage brokers, because after all, they are that conduit really to getting people in and having those conversations with people to keep the education going. And I know there's some brokers doing amazing work with schools and going in and talking to school children about mortgages and just how interest works and things like that, because things like that you just don't learn, do you, at school?
Absolutely not.
But absolutely, there's more to be done. But exciting times, I'd say.
Agree. And I think the final thing from a market point of view is thinking around base rate and the likely trajectory that we're going to see there. And I think what's been interesting is that the Bank of England are widely expected to make kind of 25 basis point cuts every quarter. That's kind of what's been priced into the market. And that's, again, when it comes to consumer education, it's thinking about when base rate does move, that doesn't necessarily mean that you're directly going to see mortgage rates reduce at the same time, because of the way that they're priced and the fact that swap rates are based on that 2-year or 5-year outlook when it comes to the future path that base rate's going to be on. What we have seen in the last few weeks is where the tariffs that Trump was talking about did create quite a lot of nervousness in the market and quite a lot of volatility in terms of daily changes in on swap rates. That has kind of cooled now because clearly there's been some backpedaling or pausing on some of the things that were announced. But I mean, the Bank of England are in an interesting position because we're seeing wage growth is still quite high. So inflation of wages continues to go upwards, which obviously is an inflationary pressure. But you're also seeing unemployment starting to tick up as well. So they're kind of two counterpoints that you'd want to try and influence with the decisions that they make. And we've also had Hugh Pill make some comments in the last week or so around the need for caution. So it's certainly unclear what will happen, but it's fair to say that the sub 1% mortgage rates that we'd all become accustomed to don't look likely anytime soon. And I think that now we're seeing rates kind of falling below that 4% mark. That's been quite encouraging from a consumer point of view, because that feels to me like we're getting towards the new normal for where mortgage rates are likely to be for the foreseeable future. And I'm talking like the next decade. I don't see any indication that we're going to see a real reduction compared to where we are now, but at least they've kind of come down from the peaks that we saw in the last kind of couple of years. So yeah, I think optimistic, we should say.
Yeah, absolutely. I mean, it's a challenging time, isn't it, for mortgage brokers as well if rates come down, because obviously then they're getting in contact with their customers and they're changing the rates for their customers. So doing a really good job at trying to get their customers the best rate, but totally appreciate that, you know, that's a lot more work for them than they would do if rates are stable. And let's be honest, you know, we'd always like rates to be stable, because it makes life a lot easier, doesn't it? We don't want, as a lender, to be kind of putting up new products out and then having to pull them and change them. That's not an ideal world for us either, to have somebody sitting waiting to see how much more we can do before we need to change. But I guess it's just a factor of where we are and the way the market is currently. So obviously, you know, we do what we can, don't we, as a lender? We allow brokers to change their products now using our e-mortgage system, so rather than, you know, try to make it as easy as possible for them to do. But appreciate it's a challenge for people.
Absolutely.
Cool. So as an industry then, what do you think we can do? So it's interesting, isn't it? So obviously there's probably an issue with housing supply, I think it would be fair to say. We've got the government new build targets, so aiming to build 1.5 million homes over the next 5 years, which is a big number, about 300,000 a year. So, I mean, I saw some estimates relatively recently from Heriot-Watt University that said that we need to build 340,000 homes a year, and 145,000 of those need to be social housing. So I think that really demonstrates the scale of the problem. Obviously, you know, there's a lot to be done. I think the HBF, so the Home Builders Federation, have talked before about how many planners. I think they need 2,200 additional planners as well. And obviously we're dependent on builders to be able to build these properties. So that's quite a challenge, I would say. But obviously having more supply would help the market. But what else can be done?
I think you're absolutely right to highlight supply. Supply is a major challenge, and you know, has a huge bearing on house prices, which continue to rise. And again, it's a fine line, isn't it? Because you want to see house price inflation going upwards. Everyone wants to see that their houses are going up in value, but it's just to what extent and what is that doing for those people that aren't yet on the ladder, as it were. I think as an industry, we're already doing a lot of good stuff. So I think engaging really proactively with the FCA in their consultation and being quite clear around the changes that would help in real terms. So definitely more of that to do. Certainly from a Skipton point of view, we continue to engage with policymakers directly. So speaking to the government about what areas are kind of areas for opportunity and things that would further bolster the housing market. I think shared ownership is an area where I would expect to see that kind of grow more as a viable option for many would-be buyers. You know, it's a really good way of getting onto the property ladder if you are not in a position to buy a house outright. And so definitely interested to see what more we can do with that as an industry, and keen to kind of, again, work with government on that. also seeing the emergence of more private shared ownership schemes. And so thinking around that and thinking about how can we help, and that's not just a Skipton thing, that's a everybody in the market,
Yeah.
you know, how can we support with that? And I think, again, it's that point that we've already made about education. So we have a responsibility as an industry, I think, to make home buying more accessible to all. So I say this often, but I think collaborating, that education and access to the information that you need is not a competitive issue. So I would really welcome the opportunity to work more collaboratively with lenders and with the broker community, which we already do, to myth bust and to encourage people that are thinking about buying to get, to get in touch with an advisor and have the conversation as soon as possible to understand what your options could look like. So definitely more collaboration. And then the final area I'd talk about would be product innovation. Clearly, I'm a big fan, and from a Skipton point of view, we continue to innovate and think about new solutions, which I know we'll come on to. But again, it's been great to see other people, dare I say, following in our footsteps. So we had YBS launch their 5K mortgage kind of after we launched Track Record, and that was great to see. And then obviously we've had the announcement that April have gone into 100% lending, which again is fantastic. It just shows that it is possible, even within the constraints that we have from a regulatory point of view. It is possible to innovate. So I'm excited to see more of that. And like I say, we can talk more about our own innovation a little bit too.
Yeah, and I think you're right. I mean, myth busting is interesting, isn't it? We saw it at the launch of Track Record.
Yes.
In that mortgage brokers said to us they could not believe the number of leads and people that they had coming in to speak to them.
Yes.
When Track Record was launched, because we made a bit of a splash about it, and because it was picked up by the BBC and Sky, I think, and there were so many people who had not realised that they didn't need to save at least a 20% deposit.
Yes.
Which to me says we need to do more education, and I think that probably comes down a bit, doesn't it, to people not necessarily going immediately to speak to a mortgage broker, but speaking to family and friends. Anybody who bought a property kind of 2009 onwards, it was a challenge, and you did need a bigger deposit than you did say in 2005. So I think it's really that's why it's so exciting when other people are coming into the market as well, because you're then getting the media representation about the fact that actually, yes, you don't need a deposit necessarily, and there are things you can do. And certainly if you're not looking to borrow with no deposit, even a 5% deposit works. Yep. So I think just that message for customers, and you're seeing brokers getting that across brilliantly. So with the recent launch from April, you saw it on Instagram and you saw it on TikTok. So, and that goes out to a whole different generation of people, doesn't it?
Yeah, so, absolutely. You're completely right. Where a product isn't going to be right for everybody, that kind of isn't the challenge. It's the awareness and piquing people's interest and driving them to take that kind of step and pick up the phone and speak to a broker. That means they're on their journey then, doesn't it? And it might be that the ultimate outcome might not be one of those products, but it's just great that's been the catalyst to encourage them to have that conversation and kind of illuminate for themselves what is possible, which they didn't know before. So it's kind of a win-win, really. And we're also helping thousands of people with those products as well, which is again fantastic.
So should we look at what we've done recently? I've been at Skipton for 2.5 years, and it feels like we've done innovation after innovation since I joined. So what a brilliant time to join.
I mean, that's exactly right, Luce. It's since we've been on the scene, isn't it, doing this stuff. Our strategy is all very much focused on supporting first-time buyers. So we have an aspiration for half of our completions to go to first-time buyers. And so with that in mind, that is what shapes our product development and our kind of policy innovation as well. So we've been really keen to continue to offer new solutions that will help those people that are looking to take their first steps onto the ladder. And I think our sort of flagship product is the Track Record 100% mortgage. So that is available to first-time buyers who have got a history of paying rent, but because they've been paying rent, they are not in a position to save for a deposit. So our own data from the affordability index that we published recently did show that there is a good chunk of kind of would-be buyers who are living in rented accommodation, who are spending 45% of their total income on essential housing costs. That's before they've fed themselves or kind of treated themselves to a new Primark jumper or whatever. We're talking about essential things that are just to do with running the house. So the likelihood that they can also afford to save up a deposit is out of reach. And so we wanted to offer a solution for that. And it's long been talked about in the industry. If someone is paying rent every month in full on time, why can't they have a mortgage, and why can't we lend to them? And so being able to do that without the need for a deposit has been a bit of a game changer, really. And yeah, I think it's gone down really well with brokers, like you say, and it's been a good conversation starter, even without it kind of ultimately ending in that product for all customers that inquire about it. And that said, we're looking at a couple of thousand people that we've already got keys into the hands of. Those resentful renters are now proud owners of their own homes, which is fantastic. And then delayed start, I'll come on to because we've got a bit more detail on that on the next slide. But hopefully those on the session today have been made aware of our new product launch, which launched a couple of weeks ago. And that is essentially, again, a first-time buyer-focused product, which is there to support people that are wanting to minimise outgoings in the first 3 months of becoming homeowners, because it can be a very expensive time. We also have a range of first-time buyer products that are available all of the time across different loan to values, up to 95% loan to value, and offer cashbacks on those as well. And then finally, Income Booster, which some on the session might know as Joint Borrower Sole Proprietor, but I can assure you that your clients do not know what JBSP is, which is why we called it Income Booster. And that is a policy enhancement that we launched a little while ago, which enables people that want to get into their very own properties but need some support in boosting affordability can add on supporters onto the mortgage whose income can be assessed and considered as part of the application, but who will not have any legal ownership of the property. And it works really, really well for those people wanting to get onto the ladder but need a bit of support in terms of stretching affordability. I don't know if you had anything onto any of that, Luce, before we move on.
I guess what I love about these things and all of the things that we brought out, the brilliance is once you bring it out and you start to get some data and you start to see, you know, who you're able to help, and you get the feedback from mortgage brokers as well. That's when, in some ways, obviously there's been quite a lot of work to bring it to market, but that's when the work kind of starts again, because you're able to change it and you're able to respond to feedback. So the thing that I love about Track Record is we put it out, it was first time buyers only. We didn't know what the market would be. We didn't know, we were pretty certain that brokers wouldn't have these customers on their desk because there just wasn't anything to help these people. But and then we started getting the calls in, didn't we, from brokers saying, oh, this is really great, but I've got somebody who's who owned a property 20 years ago and who's been living in rented because they got divorced. Is there anything we can do to help? And what we've been able to do is kind of take that feedback on board. So now it's not just for first time buyers, it's for anybody who's not owned a property in the last 3 years. And you know, then we heard that and we were able to see from data that it was the amount that people had been paying in rent that was making it a bit tricky still to get the amount they wanted for the new property. So we were able to change that, weren't we? It used to be 100% of the rent that they need to get, and we were able to stretch that out to 120% and still feel very comfortable that we were in a good position from a risk point of view. But you know, the data allowed us to see that we could lend these people a bit more. And obviously, you know, if rates are coming down, actually that helps the track record as well, because
absolutely
the cheaper the rate, the more people are going to be able to borrow. So I think, you know, the really nice thing is it's not you put a product out and that's it, innovation done. It's that we're then looking at it and seeing how we can develop it and seeing what more we can do. And that I think is one of the reasons that, you know, we welcome the Accord product and we welcome April moving into the 100% range, because the more people are there, the better for us and the more we can think about doing. So I think that's really positive.
I agree, for sure.
Should we have a look at the delayed start?
Yeah, let's do it. So like I say, hopefully those on the call have seen this in the media. We've been really pleased with the kind of coverage and the reaction that we've seen. But also we've already had offers out of the door on these cases. So it's kind of making a difference to people already, only 2 weeks after launch. So really pleased about that. I think in terms of background for the product, we kind of did some research and wanted to find out what are some of the challenges that first-time buyers face when they do take that very first step onto the ladder. And actually what we found was that 63% of the people that we spoke to had felt financially strained in the first 3 months of moving into their very first home. And also, slightly dishearteningly, a vast majority of respondents did agree that the cost of moving in kind of took a bit of the shine off from getting onto the property ladder. And so we thought about, well, what could we do here? What can we bring to market that's going to kind of answer this customer need? And we developed a product whereby, and like, in terms of the design of it, it's not particularly complicated. All it is that if you're a first-time buyer and you take this product, when you move into your property, you'll have no mortgage payment to make for the first 3 months. So you'll complete, you get your keys, but you don't have to pay your mortgage for the first 3 months. And that means that for those people that need extra cash for buying furniture, paying for removal costs, utilities, buying white goods, all those things that kind of build up in the background in terms of the costs that you build up when you do take your first steps onto the ladder, you don't have to worry about paying your mortgage for the first 3 months. And so that, in essence, is what Delayed Start is all about. And like I say, it's been really well received, and we continue to consider, how can we iterate, how can we make it better. We like the fact that you can also be paired with the income booster scheme as well, so you can use it in conjunction with other things that we offer, which again will help with affordability and help in terms of the loan that you're offered, and then when you start paying it back. But yeah, so it's been great so far. I don't know from your point of view, Lisa, anything that you'd add in terms of Delayed Start.
I think I've been delighted with the feedback that we've had. So obviously, when you're about to launch something like this, you go out and you speak to key people in your firms and let them know what you're doing and see what they think. And the first person I spoke to was just she just said, "This is brilliant." She said, whenever you see a customer who's renting, the first thing they ask you is, when can I hand in my notice? And she's like,
yes.
And I can't tell them, because until you've exchanged,
yes,
it's not definitely going to happen. Something could go wrong. And I think that's the brilliance of the Delayed Start mortgage, that for people who have been in rental, often there's a crossover of a month or 2 months where they're paying their rent and they're paying their mortgage payments, and often that first mortgage payment's just a little bit more as well, isn't it? So for me, that is really exciting, and probably one of the reasons that we've had such good feedback on the product. And if somebody only needs that first month, we do obviously keep the ability to overpay, so Skipton can overpay up to 10% of the year. So if they only wanted that first month and then they wanted to make the payment for the other 2 months,
you can do that.
Absolutely fine. And equally, if they think they need a Delayed Start product and then later on they actually find they have been able to align the rental, they can switch to a different product in our range as easily as the broker just putting in for a change of rate. So for me, it's great, and it just offers, it's not going to be a product for everybody, but we're not expecting it to be a product for everybody, and that's what we're doing with our first time buyer product. We've got different products for people in different circumstances, and hopefully by doing this we can help more people.
Absolutely.
Cool. Shall we, shall we move on to questions? I know there's lots of people watching. It's interesting to see what people want to know.
Hi guys, thanks so much for that presentation. Really great to kind of go into all the different market trends and all the the different suite of products that Skipton offers. We have had some questions coming in. If anyone wants to ask more questions, if you just click on the Q&A button at the top of on the menu bar, you can submit your questions there. One of the questions that's come through is about the Delayed Start, which is, will it have an impact on their credit score or financial record if they don't make mortgage payments during that first 3-month period?
No.
No
is the answer. No, it won't.
It's a very, yes, I thought that might be the case. And And another person's asked, is it possible to convert to the delayed start for existing customers whose mortgage has not yet completed?
I think that would be an option, wouldn't it, Luce?
Yeah, we have had people do it. So,
yeah.
you know, we need a little bit of time before completion.
Yes, we need some notice. If they're planning to complete tomorrow, it's probably not going to be doable. But yeah, if it hasn't gone through, and that's a preferable option for your clients, then we can work that out.
And you know, you mentioned that the was one of the, because the 3 months payments gets added to the mortgage balance, so, and the interest starts from when the loan is taken out. So I suppose the total amount to be repaid is a bit higher, but like you said, you can make overpayments. But I suppose, how can brokers manage that discussion with their customers? Because I suppose you're just like, yeah, first 3 months, no payments.
Pay.
What you might need to pay is a bit higher, but you can manage, like, what kind of, I suppose, on that advice bit, is it just saying, look, you can make overpayments, you can do these other things. So yes, you may pay more in the long run, but actually there are ways to manage it.
I guess my expectation is that a broker wouldn't be suggesting this product to the customer unless there was a need for this product. So if they didn't need to delay their mortgage payments for the first 3 months, then I would be expecting them to pick a normal rate. Because you're right, at the end of the term, then the balance is slightly higher. And obviously then they pay that off for the term of the mortgage. But that is the brilliance of our broker community. You know, they go through all the options and they actually pick a product that meets the needs and circumstances of that customer. So I would fully expect everybody to kind of be having that conversation and fully understanding the customer's financial situation, you know, whether that's down to whether they're going to need to do lots of work on the house to start off with, whether they're still paying their rent, whether they've got loads of things to buy, whether they've already got it. So brokers have all of those conversations already. So they're absolutely the best people to work out which product would be right for the customer.
Another question that's come through, which is actually about the income booster and whether it can be used for a remortgage. What's the maximum number of applicants and maximum mortgage term? Is there a maximum age, etc.? And I don't know who wants to take that question.
Do you know this off by heart, Luce? Have you got this in your back pocket?
So it's 4 applicants.
Yes.
Any combination of people, so either on the mortgage or on the deeds, is absolutely fine. They don't have to be a family member, can be a friend, can be an employer, can be the auntie that you've always called auntie that's not actually related to you. So anything like that, not a problem at all. Maximum age is 75. We can push it up to 80 depending on how much support the person who's on the deed needs from the additional borrower.
Great. And another question that's come through is, does it have to be 3 months? Could it just be 1 or 2? Is there flexibility? You know, I know 3 months is kind of but if someone was actually, I only need 1 or 2 months.
Yeah, they could just start paying. So the product is set up with a 3-month breather, if you will. So we will start taking your mortgage payment at month 4. But if somebody wanted to just have the first month off and then start paying, they could just pay by way of an overpayment in the kind of second and third. That's absolutely fine. And that would mean then that you were paying down a little bit sooner. So if that you can flex it that way. Yeah.
And another question is, obviously we can use delayed start with the income booster. Is there, but we can't use it with other things like shared ownership? I know we're still very early days. You know, I think it was only, like you said, only 2 weeks ago. But is there kind of, you know, would you consider kind of potentially including like shared ownership, which was something that you guys mentioned, or maybe making it, widening it so it can be used in conjunction with other things further down the line?
Definitely. I think it's just to Lucy's point earlier, which is that innovation isn't a one and done situation. You know, you launch something, then you get your data, and then you learn from, in a big part, you learn from feedback from brokers and understand actually how is this working in practical terms and where are the areas to enhance. So I would say that nothing's off the table right now, but we have to give ourselves long enough to learn from what the data is telling us and to listen to brokers. But if there would be appetite to offer this product in conjunction with other schemes, that would definitely be something that we will look to consider for sure.
Yeah, and you kind of mentioned that kind of talking about innovation, the fact that other lenders are kind of coming into that 100% LTV space. I think there was a new one yesterday, I think Gable Mortgages as well, and then April's come out with 100% LTV. And do you hope that there are going to be more lenders kind of coming into that? I know that you kind of mentioned it during the presentation, but do you think more competition would be welcome, I suppose, just to make it a bit more
Absolutely.
explicit.
Yeah, it would be welcome because it just means then more consumer choice, doesn't it? I'm very pleased that we
Yeah.
went first. That's really great and really exciting. But of course, I would welcome more people entering the same kind of spaces that we are, because that means then that there's more consumer options and more options available. So I can only see it being a good thing, really.
And one of the other things with the track record that I think is really which is a really good aspect is including that rental history. And sometimes, well, when I speak to my friends, they're just like, no, but I'm paying like £1,000 in rent every month. Why can't a mortgage lender see that, or why isn't this included in the same way? It's probably, and what are the challenge, I suppose, from your perspective, like what are the challenges of including that rental history, of like what kind of did you guys have to go through to kind of start bringing that into the calculations, I guess, more explicitly?
I mean, I don't think it was that challenging, to be quite honest. I think what was challenging was getting people comfortable with because nobody else was offering that kind of lending. It was having the right conversations and thinking about it in the round, because clearly we were a responsible lender and we needed to make sure that we were comfortable what we were doing and why. But no, I mean, it felt like common sense to us as well. So why wouldn't you include someone's rental history as a consideration when you're assessing their affordability for a mortgage? So yeah, I think it wasn't that aspect of it. It kind of feels like common sense to me and to most people that I talk to. If you can pay rent every month on time, then you can probably pay your mortgage, every month on time. So it kind of, that side of it wasn't really the big challenge. It was probably the more of the conversation was around the 100% aspect, because clearly we're saying, yes, we'll take your rental into account and you don't need to save a deposit whilst you pay your rent. So it was probably more that side of it that was a little bit more complex. But again, clearly we've got there and it's been a great success. So yeah, happy with that.
I think the rental is what gives us the confidence, isn't it, to lend at 100%, because obviously, we are a responsible lender. We still do an affordability for people. We're still asking for their income. We're still looking at their expenditure, as we do for every other kind of case. So we're doing the normal affordability, but it just gave us the comfort to say, actually, these people are struggling to save for deposit. We're okay at 100%.
Yeah, and kind of looking at it was one area that you mentioned was shared ownership, and I think that is kind of what we've been hearing at Mortgage Solutions, is that some brokers are reporting that they're seeing more inquiries, especially since Help to Buy was scrapped a few years ago. Do you think that there's a bit of a there's more education that needs to be done on that to consumers more widely? Because it does seem, if you're not in the mortgage market and you don't know about it, there might be a bit of a actually that seems quite complicated. Do you think? But so I suppose, is it just again building that awareness of different schemes, different things that are available?
Yeah, I would definitely agree with that. I think initially after Help to Buy, when you asked any lender what they were doing, and shared ownership was the one thing that everybody kind of, or a lot of people, had in common. That seemed to be the horse that everyone was backing, essentially. I think education is key. I think when shared ownership first came out, it was probably quite difficult to understand who was able to have it, and I suspect that actually that is still the case. But if you ask, if you've got a subsection of people off the street, I would imagine that lots of people wouldn't really know what shared ownership was. I think there's probably still a little bit of a stigma around it as well. So I think it's key to kind of help to break that down. Because actually what it is a way of getting on the housing ladder and giving you security of tenure. There's no your landlord's going to sell and you're going to need to move and you're going to need to find another rental property, etc., etc. So I think it's a great proposition, but I do think it's incumbent upon all of us to get that message out and help people understand that actually that is an option.
And I know sometimes when I speak to brokers, and they're kind of like, Help to Buy had its flaws, partially because it just it inflated house prices, but it did really solve that affordability piece. Would you do you think the government's kind of talked about making the mortgage guarantee scheme permanent? Do you think that bringing back some, and I know Gen H has come out with a new build boost, which is a kind of like a Help to Buy alternative, but do you think that bringing back Help to Buy would ever be an option, or is that kind of just like, no, that door's closed, we need to actually look at what we have now?
I think we don't know the answer to that question, do we? We don't know what the government are going to do, and they clearly have a lot of things on their list of things to look at and could be worried about. Help to Buy clearly has a lot of fans and critics alike. You know, it's something that is it clearly made a difference in terms of the sale of new build properties, but there are some that kind of question, is it helping to create incremental first-time buyers? Is it helping more people to actually get into the property, or is it helping people get into a maybe slightly bigger new build property? I think there are people that think it was absolutely fantastic, and people think that it had its failings, and I think that's fair enough. Clearly, anything that stimulates the market is a good thing, and I know that it has kind of left a bit of a gap from a new build point of view, and kind of having that confidence as a developer to go into a new project without it is daunting. And yet, like you say, there has been some innovation in that space to kind of support from the likes of Generation Home. I think we'll have to wait and see what the government come up with. I don't know that Help to Buy or a Help to Buy replacement would be the solution that we would need, but clearly it has a role to play, and maybe it could have some positives if it did come back. We'll have to just wait and see, I guess, is the point. We don't know. We don't have a crystal ball.
Yeah. And another aspect that's kind of that you guys mentioned during the presentation was about affordability stress tests, and how, you know, I think because the FCA came out I think it was in March, and said, actually, we're going to offer some clarity on what lenders can and cannot do. You know, and I think there's a lot. Do you think that more lenders are going to be lowering their stress tests? And I mean, it's not that. And, you know, do you think that that's kind of presented a bit of a you know, is it we're kind of a bit of a, trying to think of the right word, a tight, like a point of, you know, we've kind of reached, you know, it's a moment of change, basically, kind of that.
Yeah, it's been really good to see people reviewing their stress tests and their stress rates, and interesting as well to be quite vocal about that, because I think historically, particularly residential stress rates, were all very much behind the scenes. There wasn't a lot of visibility of what people were stressing at, and certainly from a broker's point of view, it wasn't easy to get hold of what is Lloyd's Banking Group stress rate. You know, that wasn't something that was available. So even just being more transparent is a positive thing, I think, because it helps to give a little bit of colour to what is happening in the background. I think it is likely that we'll see more lenders making changes to their stress tests. And again, fantastic. Anything that helps people get onto the ladder or get the mortgage that they want to be in the home of their dreams, that is a good thing. I think that where we have to be a little bit cautious is that understanding that stress rate in isolation is not the determinant of what the loan is that you're going to be offered as a borrower. So it's one aspect, and that's an aspect that obviously lenders have been very vocal about. There are other elements behind the scenes by way of the overall affordability assessment. Lenders treat that differently depending on their own risk appetite and their own assumptions and their view of the future. So when you're looking at, as a lender, someone's ability to repay, and you are stressing that, there are so many different factors that go into it. The stress rate in isolation isn't the only thing that determines the maximum loan that's offered. So I think it's a good thing. I welcome it. I just have a bit of caution around, don't assume that because someone's reduced their stress rate, that's going to mean for sure your client is going to get a bigger loan than they did before that happened, because it isn't a given, because you don't know what's happening in the background with the wider affordability assessment. But clearly, I welcome it, and I welcome the regulator being really clear about what they are asking for and what they're expecting, because clarity helps. And we know that things like MCOBs, clarity is not, you know, the first word that comes to mind when you think about mortgage regulation. So it's good to see.
And I suppose I think we're running out of time, but I suppose just to wrap up, if you wanted brokers to take away one thing from this presentation, what would it be? I'll go to Lucy first.
So my takeaway would be, please talk to us, feedback to us, let us know what you want, let us know about the people that you're not able to help, because if we can do something, we absolutely will look to do it. You know, we work off broker feedback, we work really closely with our broker firms, so feedback is a gift for us. We'd love more, please.
Jen, anything to add?
I mean, I would just echo that, really, isn't it? You know, we want to work in collaboration with the broker community, and so yes, please tell us what you want and we will look to deliver. And then I suppose the other thing is just thank you for all that you're doing. I know it's been a really busy start to the year. There are a lot of people out there that need mortgage advice, so you're doing a great job, so please carry on. And thank you.
Great. Well, thank you to everyone that attended today. And we're just going to put up a slide now, which has just got some contact details, and we'll just leave that. So if you do want to, take these guys up on their offer to kind of give your feedback, it obviously is very, very helpful for them. And thanks, Jen. Thanks, Lucy, for that really illuminating presentation.
Thank you so much.
Thanks, Anna.